All right, everyone, welcome back for another episode of Carnivore Trades. Today is Tuesday, March 29th, 2022. If you haven't done so already, please like, comment, subscribe to the content. Come find me on carnivoretrades.com for swing trading, alerts, and commentary. We just booked two more winners today, and that comes from really just shutting off the emotion and buying into the fear and trusting the charts. We took a winner on Zoom. This is the second time we traded this one this year, and we took a winner on General Motors as well. GM, so 8.6% there. Anyway, so a lot to unpack here today. Um, is S&P going back to all-time highs here? Take a look at Apple. It's only 2% away. Or is this kind of a blow-off move? Now, we did have the yield curve finally invert today, twos inverted tens. We're seeing sentiment now kind of shift a little bit here. If we look over here, we'll take a look at that yield curve. You can see 10 got down to basically close at the lows here at 2.382, and then the 2% got all the way up to, I believe, 2.45. So that did invert there, and obviously that is an undefeated indicator for a coming recession. And we're seeing sentiment shift now, and I'm seeing kind of in my feed at least, starting to see some bears get angry that the market's not respecting that. And we're starting to see the typical every single time we get a yield curve invert, somebody goes on TV and is like, oh, see, this time it doesn't matter. This time it's different. This is the reason why the market's bullish, blah, blah, blah. And it happens every single time. But, I've been talking to you guys for weeks here that, we can't just go from max fear down here, and then overnight just go to euphoria. Like everybody is trying to short here and short here and short here, and there's just squeezing and squeezing and squeezing and squeezing continually happening. And that's really why this market's been able to continue higher here. The yield curve invert is typically like a 12-month leading indicator. So when you have, a bear, the beginning of a bear market potentially, and then possibly some type of bear rally, and the market not really respecting that yield curve invert, you get a lot of people that are drawn on board and they say, well, I guess it doesn't matter. You just got to follow trend. And a lot of bears give up. And we're starting to see that kind of, that anger. We saw it, it was kind of right in this area. It was bear confidence. Like, oh, well, we thought it was going to roll over, but it's going to roll over at the 50. Oh, it got to the 200. Well, now it's definitely going to roll over. And now that we're through the 100, now it's just, oh, market's so stupid, I guess nothing matters anymore, blah, blah, blah. So that's telling me that we're probably getting close to some type of roll up. Now, I'm not saying we're going to roll over and crash down to 400, but this market's really extended, really due for a pullback. We talked about Apple a minute ago. Take a look. I mean, we're 2% away from all-time highs. That's 11 straight days up for a $3 trillion company, by the way. $3 trillion company, and 11 days up, and then a gap and go on the 11th. That's just it's clearly gamma squeezing. It's absurd, and we're coming into earnings season. So, basically the best is priced in right now, and just an amazing move off the lows. Take a look at Tesla here. Still managing to push higher here with the stock split news yesterday, and obviously a lot of that's just hot air, but. This is market mechanics. That's what I've been saying for the last couple of weeks. Market mechanics matter. The options market matters, and that's why we were buying into the lows here. And that's why we were able to take winners, and we were, staying long this whole time while, everybody was telling us the sky was falling. But that's just really how you have to do it, and you just got to take it one day at a time. Now, yeah, we are getting pretty extended here. Let's take a look at the Russell 2000. I said that I was going to get up to that 210 area. We got through that. So 210, 212. We touched through 212 today. High of the day was 212.25. I think it's possible we could gap up tomorrow. Maybe at least try to test that 100 moving average. But you got this breakdown area. So here's where you chopped. And now right in this range is where you broke down. So you're just back testing that. If we take a look at the weekly, there's your red bar high. So you got an inside bar there on the weekly, as well as an inside bar here on the monthly. So the bigger picture here on the Russell is bearish. Although, I've been saying for a couple of weeks, the short term, near term, IWM looks okay, but now we're starting to get into resistance. Dow has a little bit more headroom here on the diamond here. I think I said 355 yesterday, so we got above that. We got above those moving averages there. And, maybe it gets up into this area and gets to that gap window. But, we're starting to get into resistance, triple Qs. That's a pretty good necktie between the 100 and 200 moving average there. You got above this pivot, but now look at all this selling here. There's a lot of selling up in here. So those, people who bought there are going to turn into sellers because they've been in pain this whole time. And you're going straight up with no consolidation. It tells me this market is short-term extended and it can easily reverse. Now we could easily have a 2% down day, but that doesn't mean that we necessarily go back to the lows. But given how extended this market is, that would not be out of the question at all. Take a look at the VIX. Absolutely monkey hammered here, down below 19 handle, the 19 handle already. I mean, we barely bounced at that 200 moving average, barely bounced at 22. Knew that was going to be a level, but I mean, just absolutely getting smoked here is volatility right now. And, that's what happens. The VIX is a spike index. It goes up, straight up, and then it goes, down just as quickly. All right. Inside of tech, we talked about the Qs, SMH here. Again, maybe a little bit more upside here. 100 moving average, you got this pivot up there. But, again, getting extended here short term. IGV, same thing. I still think it has a chance to get up that 360 area. There's your red bar high there. But, and it did do a little flagging first, so that's nothing terrible. But yeah, 360 would be pretty good resistance there for cloud. Dow transports, again, I told you guys I love this move here. Nice little bullish pattern. I said on Friday I got a buy signal on that, and that broke up to the upside. This should get up to around that 17,000 handle. So nice move there for the transports. Full disclosure, we are along the transports via TPOR, which is triple ETF of the Dow transports. And then the jets also, we've been watching that one. I told you guys 22 bucks. High of the day was 22.06. Nice move, and pulling right back off of there. There's your resistance area. Look, there's your little pivot high. So, that's going to be resistance when you come back into it. And, a little extended getting into there, and that pulled right back. All right, so the yields, we looked at the 2 and 10 really quickly, but we'll look at the 10 again. So pulling back off the highs, same thing with the 30-year here, coming back in. And I think I kind of suggested over the last few days that we did get really extended on yields, and there may be some sort of pullback here in the cards. I'm not convinced that the top is necessarily in, though. I still think we can have one more thrust here in yields, potentially. But for right now, the TLT, that was a good area there around 128. Nice little kind of bottom candle there. You're getting a bit off the low. So it's holding up for now, and yields could be due for some type of a pullback here. But here's the story of the day. Take a look at HYG up 1.23%. Confirming itself above the 20 moving average now. And if there was any sort of bull case to be made, at least in the near term, this is it right here. So you have made a reversal now on HYG, which is high yield debt. And that was really the, I've been saying this is the canary in the coal mine. If this doesn't get a bid and we continue higher, this market's, it's basically telling you that at some point it's going to be a really good shorting opportunity. And there still probably will be a good one, but for the time being, this is really bullish. This is very good for the market. It's not the be all end all, but this is a very good sign for the market in the near term. Anyways, let's flip over to XHB. So still underperforming here. This is a weak area, especially with yields pulling back. This should be a lot higher. VNQ, it has had a nice move today, up almost 3%. So a big move there. Gap and go pattern there for VNQ. You kind of went up here and kind of made an ABC kind of pattern up sideways and now up again. So this will run into resistance up in this area around 110, 111, 112. Got that big red bar and these pivots there, but nice pop there for the VNQ. Let's take a look. So fins coming off the high, so nice gap up on XLF, but pulled back off the high. Same thing on JPM. I think this just needs to do more consolidation. That 50 moving average is pretty tough resistance here. This is also where you broke down. So it's consolidating to try and get through that. So there is another chance, we could give XLF and we'll say JP Morgan the upside bias to maybe 148, 150. XLF, could potentially make a move back up to that maybe 40, 85, 41 area. So nothing terrible there. Broker dealers did have a nice day. Again, HYG is largely responsible for that. So those junk bonds and stuff like that the broker dealers sell, getting off the canvas is a very good sign for XBD, which is probably why it was up so much today. Getting back above this trend line as well too. All right, so XLE, so energy just can't keep it down. It's like that. It's like Rocky, right? So every time we get a gap down or some type of a sell, the dip just gets immediately bought. But again, if we can't take out this high here, there's nothing to say it can't roll over. Crude did pull back in a little bit here. Seems like there's at least rhetoric about de-escalation. So it got down to that 50 moving average, got a nice bid. It held up okay into the end of the day. XOP actually closed green. OIH closed green as well. We'll see what we get out here tomorrow. Again, I think it would not be surprising at all for some of these stocks to cool off a bit. Again, they are very stretched here. I showed you guys that monthly time frame, especially like the XOP pulling back off that 100 moving average potentially there. And XLE, I mean, just just so extended here on the monthly time frame. So again, I think they're due for some type of a correction, but as long as crude holds up and holds trend, nothing to say they can't go a little bit higher here. But if we continue to get lower highs in crude, I think it will break through this 95 area eventually. All right, nat gas pulling back a little bit today. So coming off that double top area, we pierced double top. We made a higher high yesterday, but again, pulling back a little bit. So maybe we get back into that $5 area. And if you make a higher low, as I'm going to say, you can't break through this. But for right now, a little bit of a pullback in the cards. Dollar index did get hit quite a bit today. But again, we talked about this. This is just backing and filling. It's, it just got extended and it's into a lot of weekly resistance. Gold here. So gold got hit pretty hard. Did come off the lows nicely. Take a look at GDX. Impressive recovery. So getting back above that 20 moving average, that's a pretty strong dip buy there on GDX. The problem I have now is take a look at silver. Like this got smoked today. Came way off the lows, but I mean, that's a big drop for silver. It's basically 25 bucks all the way down to 24 in one session and then back all the way back up. So that's a big move there for silver. The thing is, the positive is the SILJ came all the way back up and closed green. So again, the metals are showing some signs of bullishness, which is what you want to see. But right now, the pattern's too sloppy for me to really do anything with it. We need to see a little bit more. And again, obviously gold, we got to watch these two levels here by Thursday's close. That's going to tell us a lot. Platinum taking a big hit as well, getting support. This is where you broke out of, so no surprise there. Closing green, but still a pretty ugly reversal there on platinum and palladium here, as this is bidding off of that basically 2000 handle and coming up off the lows. Copper with a kind of flattish to up day. And maybe it's starting to flag here, so nothing terrible there. When I see an asset do that, probably needs to do a lot more flagging if it's going to try to attack that 4.8, 4.9 area again, but nothing too wrong with it that I can see. All right, flip over here, back to trading view. Let's look at the coins. So again, I feel like I say this every single day, but what a leading indicator Bitcoin has been for us. Now, again, I talked about the resistance areas that we're getting into on the Qs, on the Russell 2000, very close on the IGV, we're close on the Diamond. So what's the resistance level I've been giving out on Bitcoin for the last 3 months? It's this trend line here. So we're getting extended, we're getting into that. So if we get into that and we start to pull back, that probably tells you that the market is going to pull back as well. That could be our indicator there. So on Ether, I think to get that 33 area. So maybe this can, this had a nice move here. This can maybe get up to 36. So that's going to be a tough area of resistance here. You had that test candle here, a couple test candles, lower high pivots, and then then a breakdown. So there's going to be bag holders in there that turn into sellers. So if, again, we get that area on Ether to hit and we start to pull back, same thing with Bitcoin 49. Maybe, I could see, like I said yesterday, I could see a euphoric pop to 50,000 to get a bunch of bulls lured in, and before they sell it back down. So I wouldn't rule that out, but watch these coins. If they start to reverse, especially if we get a gap up tomorrow in the equity markets, I think there's probably going to be, I would be a seller into that. Again, we took some winners today. We're just kind of trimming right now off of the lows. We bought these lows here. We're trying to, pare back risk as the market moves up. So that's sort of the game plan there. But if you see like Apple, I know it seems ridiculous, but this whole move has been ridiculous. But what if they gapped it up to all-time highs tomorrow? It's only 2% away. So I wouldn't rule that out. And that would be like the ultimate euphoric move for this market and for this amazing, and this is one for the record books here, this amazing rip your face off rally. All right, guys, anyways, I'm gonna wrap it up here. Come find me on carnivoretrades.com, like, comment, subscribe, etc. if you haven't already, and I will talk to you all tomorrow.